Hey everyone, welcome back. So markets are looking pretty good right now. We are close to all-time highs in a lot of indexes. Tech is leading the charge, but honestly, it's broader than that. Yeah, other sectors are joining in, international markets too. However, if you just look at the S&P 500, there are some red flags, and we talk about that in a second. On the crypto side, Bitcoin and the broader market are getting some breathing room after a tough stretch. So that's good to see. Now, the one thing I'm watching closely, and this is where it gets a little uncomfortable, is bonds. Yields are rising, and not just here. We're seeing it globally, and Japan especially is catching my attention. So that's a moving risk, I have to admit that, but it's real. So that's the setup for this week. Broadly bullish, some great momentum, but bonds are the thing worth keeping an eye on. As always, let's get into the charts. So here is the S&P 500. The futures, we have a small pullback today, which is welcomed. But what you can see, and that's the red flags I'm talking of, we have our own heat index, not only in crypto, but also for stocks, which indicates how breadth is performing. And as you can see, while we had a super strong rally, breadth is not going up. Yeah, so we look at the components above 200-day moving average, net new highs, as low as the steepness of the advanced decline line, and so forth. So that should go up as well. And the fact that it doesn't is a little bit of a warning sign. However, it's not just the S&P doing all-time highs. It's the whole high beta complex. Yeah, that's high beta versus low vol is at all-time highs. Even if you're just investors in small caps, you have, let me get rid of that here, you have new highs. Or if you're just a value investor, you are at all-time highs. So no matter how you are invested, emerging markets, right? Look at that. New all-time highs after a huge consolidation. That's not bearish. And even, let's say, if you just invest in large caps without the Max 7, you are at all-time highs. So it's a broad bull. We love that. However, I have to highlight SMH again. So the whole semiconductor AI complex is really getting stretched, especially if you look at how far we are away from the 200-day moving average. Yeah. So we are around 55% above the 200-day moving average in a super large ETF. That's really stretched. Yeah, we never had that in history. And so I talked already about expected pullback. We never had that really. So, but it's really not a buying opportunity now. Yeah, I would be cautious here. But expect in bull markets, it's especially at later stages, violent, dramatic pullbacks. Yeah, so volatility is normally increasing along the way. And you also see that, I mean, we had the biggest inflow in leveraged long semiconductor ETF in the SOXL, over 1 billion just on a Tuesday. Yeah, that's sign of Froth. And also, if you look at the post from Eric Balchunas on the Cerebras System stocks, that's an AI chip maker, IPO'd on May 13, and now a day later, we have a 2x long daily ETF on that stock. Yes, you see, but that's also a sign of a bull market. You have frothiness. So I would just be cautious now and not FOMOing into this rally. So that brings me to bonds, because here we have a problem going on, especially with Japan, right? So Japan has a massive problem, and by massive I mean 1.34 quadrillion yen. That's how much debt the Japanese government currently holds. It's the highest debt load in the developed world, sitting at roughly 230% of the country's entire GDP. But for decades, it wasn't actually a crisis until now. So Japan managed this astronomical debt mountain using a simple cheat code: zero and even negative interest rates. We know that. Borrowing money costs essentially nothing. But to fight inflation and protect a weakening yen, the Bank of Japan has finally been forced to raise rates. And that changes the math completely. So when rates go up, as you see here, the cost of paying back debt skyrockets. Yeah, so for the fiscal year 2026, over a quarter of Japan's entire national budget is eaten up just by servicing its debt. Pure interest payments alone consume over 10% of the budget. That's around 83 billion US dollars. And that is 83 billion dollars that can't go to infrastructure or technology or defense. And this is happening at the worst possible time. Yeah, Japan is facing a rapidly aging population and a shrinking workforce. Yeah, so social security and medical costs are surging, while the tax base to pay for it all is shrinking. Yeah, and you see that here. Market is worried. I think it's not just the inflation story. It's also the market is aware of this fiscal dominance trade. There is no discipline whatsoever, nowhere. We love France, but also no fiscal discipline. That's going up. UK, same thing. Look at this. That's not a topping pattern. This yield is going up. New records, right? 580 for gilt 30 years. And of course, it's also spilling over to the US, which has no fiscal discipline. Why? Yeah, we need to finance a war and all this other stuff. So that thing, it looks like it's slicing through this blue resistance line to new highs, and also 5-year break-even inflation rate. That's a bottoming pattern, not a topping pattern. As you expect higher yields, and then it really just depends on the rate of change. Is that slow? Fine. Do we get a shock moment? Not good for the market. And you see emerging market bonds versus 10-year treasuries. The market is preferring emerging market bonds. And yeah, that brings me to crypto, which could be a hedge. And that's also, I mean, I spoke about that crypto might be consolidating around the 200-day moving average cloud. And finally, we do that here. And I can imagine that, yeah, we are maybe even consolidating here to 76. Yeah. And then maybe up again and slicing through the 200-day moving average. That would be nice. And we also had the Clarity Act passing through the Senate Banking Committee with a bipartisan vote, and that brings clarity on rewards, tokenization, DeFi, and who is responsible for what, the SEC or the CFTC. So that could bring more push to crypto. Ethereum is a little bit behind Bitcoin, but beautifully consolidating here in this wedge. So I think it's just a question of time until Ethereum joins Bitcoin. And you see it also in our crypto breadth report that finally also small cap and mid cap coins are joining the party. over the last 7 days, 30 days, outperforming Bitcoin and Ethereum, right? So it was since March just a large cap story. Now it's also a mid cap and small cap story. We like that. And it's also reflected in our crypto heat index, in our breadth indicator, right? We had our ad signal on March 11, and since then it's going up. Wouldn't be surprised to consolidate here as well before we see further breadth, right? So we have to watch that. Gold is pulling back against S&P pretty strongly, right? Let me show it this way. So can imagine that we have form a cup and handle here. With all this debt, I think commodities, precious metals, gold are well supported. And the only thing we have to watch here is the dollar. Yeah, we have a big weekly candle here to the upside. So I wouldn't be surprised if we if you stop here, consolidate around the 100 level again before we go down. That would be good. Otherwise, a rising dollar, maybe together with the bond debacle, wouldn't be good for risk markets here. So with all that said, with all that bullishness, we have to watch the dollar and we have to watch rates, and primarily rate of change. Yeah, short moments, fast moments wouldn't be good. I think anything else, lower, slow grinding up, we can digest, but let's see. It definitely will be interesting. So trade carefully. That's it for the week. I wish you a nice creative weekend, and as always, see you next week. Thank you very much.